In the coming hours, South Korea's central bank will decide on the key interest rate. The Bank of Korea has gone ahead with a total of 7 rounds of rate hikes since last February to calm inflation. More hikes to come or on an end to the rate hike cycle. For more, we turn to Professor Yang Hee-dong from Ewha Womans University. Welcome to the program.
Hi, thanks for inviting me.
Good morning. Many market analysts are expecting a rate freeze this time at 3.5%. Do you also believe so? If yes, then why do you believe so?
Well, I do agree with the market expectation because there is the very positive market expectation to freeze the basic interest rate. Well, I think about the 4 major reasons for this very positive expected. The first one is the FRB in the United States has slowed down their pace of interest rate increase. Last year, they made giant steps 4 times since June through November. And then in December, they made a big step, 50 BP increase. And in February, they made a baby step. And there's a very strong speculation that in the next month, March, they will make another baby step. So in other words, the major origin of this interest rate increase is the United States FRB, and they're slowing down their interest rate increase. And the second reason for this expectation is Korea is now suffering from kind of stagflation, which is a combination of inflation and also the deflation. Because, the last year, our GDP growth stayed at 2.6%, which is the lowest after year 2020 when we suffered from COVID-19. And if you get focused on the fourth quarter last year, our GDP was decreased by 0.4%. And compared to the YOY, in other words, the 1 year before, the fourth quarter GDP increased only 1.4%. So we can tell that this stagflation has started since last quarter. And there's strong speculation that this year, our economic growth will stay at 1.7, which will be adjusted to 1.5, 1.3 by BOK today. So that is another reason why we can increase the interest rate furthermore. And the third reason for this speculation is BOK has changed their monetary policy. They used to put more focus on decreasing the inflation, but now they put more emphasis on economic boost, right? Synchrony with the government policy.
Right.
And also, they seem to be very, suspectable about the integrity between their basic interest policy and market interest, because market interest is getting lowered due to the instruction from the Financial Supervisory Service. And last reason is a high household debt ratio. Our household debt ratio is highest among the advanced countries with the 4.3%. So if we continue to increase this basic income, and lots of households will suffer from high payment back to their banks because most of the loans come from their real estate purchase.
Right. High housing debt. And also you mentioned high inflation. We all know it's no exaggeration to say that high inflation here in the country has been such a headache. But do you believe the rate freeze will actually tame the soaring inflation this time? What do you think?
Well, as I said, I have observed a gap between the basic income rate posed by BOK and also market interest rate. Because, in other words, the BOK needs to take more time to investigate and study the impacts of their interest policy over the market interest. Well, last year, we had a very high CPI increase, and there was a price increase in July with 6.3%. And afterwards, we had about a 5% increase in the CPI increase. And BOK estimate that the price increase will stay about 6.3 throughout this year, even though their target is 2%. So in other words, no matter what kind of interest rate they come up with, they think that we will suffer from 5% increase of CPI in the first quarter. It will lower down to 3.6 throughout the year, even though their target is 2%. So yeah, if you ask me if our interest rate will be tamed, I say yes. But in the first quarter, no matter what kind of interest we may have, we will suffer from 5% level of CPI.
Right.
in other words, the price increase.
Then let's say the rate freeze does take place today. Then does that mean we are nearing an end to the rate hike cycle that's been going on for over a year and a half?
Well, I don't think so. Here's a very interesting report published today by FKI, the Federation of Korean Industries. They expect that by the end of this year, our base income, by base interest will up to at maximum 4%. In other words, we may have about a 1% point increase for the basic the interest rate. What about the United States? Well, they will make another baby step next month.
Right.
And I do believe that the interest gap between the U.S. and Korea will be up to over 1.75 or 2%, which is the highest in the history between those two countries. So I don't think this interest rate will not stop for a while.
All right. Okay. Thank you so much for your insight this morning, Professor.
Thank you for inviting me.